Hold on. What the hell is a housing recession? We've talked a ton on this channel about the word recession and redefining it from an economic perspective, but Lawrence Yun, the head of NAR, just came out and said we are in a housing recession. Well, we're going to dive into that and a lot more in the September 2022 market update. Stay tuned. What's up, everybody? Jeremy Kane, eXp Realty here, bringing you a very exciting September 2022 market update. And the news isn't all great and gravy, so we're going to dive into that. But first, please like, comment, subscribe. If you're new to the channel, we drop all kinds of knowledge about real estate. We have market updates, we have education, we have home tours, we have client testimonials, always bringing you everything you need to know about the Denver real estate market and the real estate market in general. And let's get into September 2022 market update. What is a recession? A period of economic decrease, usually determined by 2 consecutive quarters of GDP decrease. That is what a recession is. That is what we've talked about, but now all of a sudden we're in a housing recession. And I'm here to call BS on that because a recession is typically brought on by a negative economic connotation. So you're here to tell me that homeowners who have experienced 40% appreciation over 2 years in our market are in a recession? Okay, it might be slowing down, but a recession, like that kind of makes me think of depression, and I'm kind of over it. So recently, all the news outlets are picking up on the headlines of a housing recession. And the honest truth is it kind of started with the builders pulling back on starts due to supply chain and due to, housing inventory kind of ticking up and all of the fear that goes along with that. The honest truth is they've just been waiting for a reason to pull back because their supply chain issues are adding up, their labor shortages are adding up. So absolutely, housing starts are down. That means that we will have less inventory. So stay tuned for that as we'll dive into that. But as we're talking about it, and as we move through this report, Lawrence Yun also said that it is a tough time to be a home seller right now. And to be a home seller is absolutely maybe a little bit more difficult. It's not throw something out there on the market and just get it under contract and move forward for 6 figures over and a crazy amount of appreciation. But we are having to stage our homes. We are having to maybe do some inspection things. And it has come back to the buyers a little bit, but we're still seeing close to 100% close to list prices. And if the home's priced right, staged right, and marketed properly, it's still going pretty quickly. So to call it a recession from a residential resale perspective, which is where I focus, is a little bit misguided in my opinion. Active listings are down 5.7% month over month. New listings dropped 18.5% this month. The median home price and average home prices have cooled down from their 20% year over year torrid pace earlier this year to a 6.8 average and an 8.5% median year over year price. That is something that, we kind of take with a grain of salt, but if you're really talking about it and those averages, both of the average and the median home prices being up that much, that's right in the average of the Denver metro area and a little ahead of the national average traditionally. Days in the MLS have grown from our stagnant 4 to 6 last month to 11 whole days on the market. And this is something that we are seeing. I recently had a listing that was on for 3 weeks. The 3rd weekend, we got multiple offers and are under contract. So we are seeing things sit a little bit. Homeowners are being a little more patient, but they're also still getting out there and they're still offering decent prices and maybe not over asking, maybe not getting those bidding wars going, but we are still seeing movement in the market, which ultimately means the market is still moving. We're not slowing down. We're not going all buyers. We're not doing all that. So that's kind of the statistic base. And we feel it as real estate professionals as well. We had to get used to renegotiating offers, as we've talked about, and negotiating inspection items and making sure the home is prime and propped, ready to rock for that first day, because the staging and the presentation is much more important. Because before, when we had swarms of people rolling in there and, it didn't really matter because the competition was, manufactured by that buzz around the listing. And now people are having a little more time. They're actually getting to see it a second time. So we need to make sure that it's presented in a way that allows people to visualize themselves in that home. And if it's done so, it'll absolutely move. It just takes a little more time. Finally, the last statistic we're going to talk about is the close to list price. It's down to 99.41%, which means that we are getting a little bit below the list price once we've hit the closing table. Not too much, nothing to write home about. Definitely down from our 105, 106% that we saw earlier in the year. And this is much more sustainable. It's a much more normal market. So that's even better to me. 107%, 106% is not a sustainable pace. It knocks out a lot of the buyers who are trying and just continuing to get beat out, especially those first-time home buyers, which really drive our market, if you really think about it long term. So that's something to really keep an eye on, is that close to list price. And all of these numbers are going down, right? And so you're thinking, oh, well, maybe we are in a housing recession. You got to understand that these numbers compared to last year, when we went into one of the most crazy, late fall, early winter time periods in our market where, October, November, homes were going for, 6 figures over asking. In a normal market slowdown time, we obviously may be seeing that seasonal, normal transcendent of prices and values and competition. But compared to last year, which was what we're comparing year over year, we are seeing, a maybe more seasonal approach to the torrid, crazy pace that we were seeing last fall and winter. So as we continue to talk about this, maybe we are just slowing and maybe not quite recession. Maybe we are getting back a little more to the norm. And what are the reasons? Obviously, the rapid increase of interest rates that we saw in June, and then we saw a really good July where we got some time back. And now into August, we are up again. So we started August, around 5%. We end August around 6%. So all of this fluctuation, the uncertainty, is really causing a little bit of buyer, kind of stepping back and understanding what's really going on and taking their best guess, usually determined off the headlines, which is usually not necessarily the full story. So we are seeing some slowing, which we normally see once the kids go back in school. And as we kind of continue into the holidays, typically housing slows down. The honest truth is we've got to get a hold of this inflation, because that's really what's costing homeowners and home buyers, people, money, because the price of, gas, which I know has come down a little bit, but all of the grocery prices, all of the material prices that we are continuing to see, all of those prices are really what's taking that cash out of our buyers and sellers' pockets and really affecting the economy and really driving some of this, consumer pullback, if you will. And if we're really going to look back on this time period, and the last 2 years have really been crazy. From last year, inventory has doubled. From 2020, we're up 25%. But if you look at 2019, our last normal year, with pandemics and all the stuff that's gone on over the last 2 years, we are still 25% behind that inventory level. So absolutely, if we're looking at year over year stats and things like that, some stats are going to see some decrease because we've had an abnormal fall and winter season the last couple years. So if we go back to 2019, which is kind of our last normalized housing market that we saw, we are still 25% below the inventory level of that point. So what does that mean moving forward? We are still low on inventory. We know that so many homeowners have interest rates under 4%. We know that a lot of homeowners own their home free and clear. So getting into a home now that's a little more expensive and maybe having to get a small mortgage with a much higher interest rate than they've been reading about in the newspapers for years is something that's going to continue to suppress inventory. Older people aging in place with the reverse mortgages and sticking in these very low interest rates, and maybe move up buyers who are holding on to those homes because they can cash flow so well in the rental market. All of these things are affecting inventory. And oh yeah, remember when I talked about the housing recession, how builder starts were down? Well, that's also another way to suppress the inventory. So as we've talked about, the basics of all of this comes back to supply and demand. And as we go into the spring selling season, I think we're still going to continue to see housing be led by the lack of inventory. And if we do go into an economic recession, if they don't change the definition again, then we will see interest rates traditionally go down 9 out of 10, 10 out of 10 times they lower during those recessionary periods, which is going to bring all those people back to the market who were scared to buy for so long. And now we're going to have all the competition. And at the end of the day, they probably should have just bought now with a 6% interest rate versus waiting for a 5.25 interest rate and having the competition and the prices driving up and all of that. So as we see, the inventory is a number to really keep an eye on. And like I said before, we can't draw on the 2020 or the 2021 numbers because there were outside influences on all of our real estate market, whether that's shutdown times in different markets and, you know, people having to get bigger homes because we're homeschooling and working from home and all of this stuff and all of those things that went into housing and affected housing that went on. But let's go back to that normalized period, 2019, and see that inventory number. And if we're down 25% from that, we're going to continue to see this supply and demand issue. And I don't know if the inventory will ever get fixed. But at this point, that's going to continue to drive the prices up, because even if we see a huge blip every spring and then we kind of taper off like we did this year, you know, we're still going to have that huge blip, and that's going to be the new standard. So as we continue, keep an eye on that inventory, and we'll definitely move forward from there. So back to Lawrence Yune's quote about how it's a tough time for homeowners who are trying to sell and home builders who are trying to build in this difficult supply and labor market. That is absolutely people that are feeling a little bit of a pullback. Recession, I think that's a little aggressive. But while this is all going on with the lack of inventory and the continued lack of inventory because of these things, the homeowners are just sitting back gaining appreciation. So there is winners and losers in every market, like I always say. And right now it's the homeowners who are comfy, sitting happy in their home that suits their needs, while the people that are trying to sell maybe aren't getting the same newsworthy over asking bids that they saw. And the home builders are dealing with all kinds of other issues that we can't really, control, because as interest rates went up, they're having buyers bail out. They're having, supply issues, so they can't build fast enough. And they're or if they are buyers are sticking with those contracts, they're under contract for a price that, maybe is a little inflated now because things have pulled back just a bit. And so now they're looking at it like, well, is it worth continuing to go now that we have this higher interest rate? Can we still make that happen? We're going to overpay at the price because we could get it for cheaper, and we're going to have a higher interest rate. I don't know if buyers are going to stick with it. So that's the predicament that home builders are in. But those homeowners are sitting back and collecting that money, and the appreciation and prices continue to go up. And so really, we're going to have to wait and see what happens with the recession with these interest rates. If they do go down, expect that interest to spike and the supply to continue to be decimated by high demand and lack of, homes coming on the market. But everything has a purpose. And although we have a lot of negative numbers for one of the first market updates in a long time, I think we have a lot of things to look at and a lot of things to measure on before we call this a housing recession and everybody waves the red flags and everybody freaks out. Let's step back and wonder, okay, well, over the last 2 years, like I've said, buy a home, get into a home, get in now, get on this appreciation rise. If you didn't do it, you're hurting a little bit right now, right? Your rents are going up. Your interest rates are higher. It's harder to get in, on that end, but you have less competition. However, if you did get in, you got that appreciation, you got that cushion. And if we do come back, 3, 4, 5%, because you just bought at the tail end of this crazy, appreciation rise, then don't worry. I think we'll continue to see those rises, hopefully not quite as fast because it's not sustainable, but that's absolutely what's going on. Remember, if you have any questions or you would like a zip code dialed in report, please comment below with your zip code and I will reach out to you and get you a report based on your exact zip code. As we know, real estate is hyper-local. Please like, comment, subscribe. Have a great month, and we'll see you next month. Jeremy Kane, eXp Realty. We'll see you later. Bye-bye.